So, and has been climbing since the start of September. So this is very bullish. Silver stocks are clearly starting to outperform broader stocks. And you asked about the book and why I wrote it. If you look at, I'm sure you guys follow this stuff too, but if you look at the data on the 60-40, classic 60-40 portfolio, 60 bonds, 40 stocks, 60 stocks, 40 bonds, we've had the worst year in almost a century. And I was looking at a 100-year chart of those drawdowns in the 60-40 portfolio just yesterday. And something that struck me is, it's funny sometimes, and you guys, again, would probably know this better than anyone, but sometimes you kind of just sit back and look at a chart and, you're looking at something specific, but other times you're not looking for something specific, but something jumps out at you. And so what jumped out at me was this chart was the yearly, moves up or drawdowns in that portfolio and going back over a century. So what jumped out at me was that if you look at the 30s, some of the 40s, and then you look at the 70s, in both of those periods, the drawdowns were not every year, but they were in multiple years. They came in clusters. And so that's what struck me, was that when these drawdowns start in that portfolio mix, they tend to come in clusters. So that's scary, and it should be scary for investors who believe too much, perhaps, in that that mix for a portfolio, if they think that's true diversification. Because if we've had the worst year, it's very likely a telling sign for what's to come over the next few years. It may not be true next year. In fact, the drawdown was so big this year, I'm not sure we're going to see. I think we'll actually see positive returns in that portfolio next year. But over the next several years, I think we're going to see multiple years of drawdowns. So that's something that I think is worth looking at and considering.
Well, the stage is set. The way I see it is, even if, look, in the 70s, in the 2000s, silver and gold did well. Also, when U.S. equities recovered in a bear market rally. So once, let's say, gold SPX breaks down versus inflation or versus gold, when there were bear market rallies for SPX, silver and gold did very well and they outperformed. So what I'm looking at is when the US equities rally, so let's say those portfolios, those 60-40 portfolios going up, that's fine. But I want to see gold and silver outperform. So I want to see them outperform like that. In the 2000s, that's pretty much how it behaved. But I noticed in the 70s that there were periods where gold and silver, they went up with U.S. equities when U.S. equities bear market rallied and they outperformed them. But there was periods also where U.S. equities completely tanked and they did not drag gold and silver down, and gold and silver went up. So look, those are scenarios that we're looking at. But look, when you look at these long-term cycles, it's just we have to awaken folks to they got to get out of their daily charts, right? And a book like that, what I like is you have evidence from a whole spectrum. You have the fundamentals, you have the history, you have charts. It's like you really went through everything you could grab on to get evidence for or against, and you compiled everything together and you tried to explain it so folks could understand. And that's evidence gathering, right, Kevin? It's like, it's the scientific approach. You want to bring as much information as possible.
Yeah, that kind of evidence is crucial, and you have to look at every angle. You look at all of the ratios, you look at the capital flows. I'm just interested, Peter, how you kind of see the silver price appreciation being a reflection of industrial demand versus the sort of appeal as, if you like, a poor man's gold. I mean, when we get a precious metals bull run, and gold begins to rise at some stage during that bull run, then silver gets attention, and because it's not as expensive for people to take a position in, that surge in demand, it certainly appears that silver has a very spiky nature to it. So that, for example, in the 1980s, it spiked to $50. The Hunt brothers cornered the market and all that kind of stuff, and there was a huge spike up. And even in more recent history, silver has this kind of spiky, reactive nature. Just curious to know how you sort of see that playing out, and whether you see what's to come as being a future price spike effectively that might take silver into triple digits, or whether you see silver as a result of, one of those factors that I mentioned, sort of achieving a higher plateau in price terms.
Yeah. So I've often said that I see silver, again, it's about 50% of its use is industrial, and I'm going to argue most of the other 50% is some sort of investment / monetary applications. And so because you include things like silverware and jewelry, and for the most part, people buy those things because of its value and tend to keep it because they consider it valuable. And so it can always be resold, and you recoup a good portion of the value, even if it's silverware or jewelry. So half of it's industrial, half of it's investment. So the way I see it is that because in the industrial side is so important, and I believe is dramatically gaining importance, I don't see most of the industrial necessarily backing off in any meaningful way for several years into the future. I'm going to say even decades. I think that the industrial side, the industrial demand, will help provide a rising floor under the silver price, and then it's going to be the investment demand that will be the wild card that will drive those spikes that we're going to see over time. And they will be many. They will be isolated in some ways, but I do think that they're also going to contribute to what you were saying, Kevin, and that you're going to see spikes. Some will see considerable drawdowns after the spikes. Some, I think, we're going to see plateaus afterwards. We're not going to see the price back off dramatically, probably back off somewhat, but then start to continue to move sideways. Here's a great example. Just a month or so ago, for a presentation I had to do, I looked at, people have been down on silver for the last year or so at least, and I said to myself, okay, well, what's realistic? Let's look at a little bit longer term. Let's say the last 6 years or so. So I said, let's look at the 3 years prior to 2020, and then the 3 years more or less since. And so the 3 years prior, silver averaged about $16. The 3 years since, silver has averaged about $23. So yes, in the last year, it has been weak and sentiment's been bad, but people need to back up a little bit and look at the bigger picture. And on that basis, which is a fair amount of time, the last 6 years, silver is up about 40%, where, in the last 3 years over where it was in the prior 3 years. So that's quite a decent performance. And so if anybody was patient following this market, decided, willing to do a little bit of homework and say, okay, what looks underpriced, what's undervalued, silver absolutely answered that, that request. And I've been asked multiple times, what kind of low do you think, silver could sell off to? Where would you be a buyer? And I've said, $17, $18. I was asked this back in June, and I had looked at that prior, and the all-in sustaining cost for silver is around 17, 18. Now it's closer to $19 with some of the inflation being baked in. But I said 18. And so we've seen it test that level multiple times. It went a little bit below it in the last few months, but that's been the meaningful bottom ever since. And now we're at 22 and a half today. So this is a great day actually for us to be talking about silver. Silver's had quite the run in the last few months. And there's plenty of momentum. I've been saying before today, you can go back and look at interviews. I said, I think that this move we've seen over the last few months reflects silver and gold starting to price in. The markets look at 6 to 9 months ahead. And I do think that we got confirmation from Powell yesterday when he spoke to the Brookings Institution, yesterday being Wednesday, November 30th, that when the market becomes convinced that the Fed will at least pause, then, let's say within the next sort of 6 to 9 months, then that's when we're going to see these metals start to take off again. And I think that's what we're seeing play out right now.